So oftentimes we get asked from business owners, how can I minimize my tax exposure? We work with a lot of CPAs, we work with a lot of attorneys that refer to us, a lot of business clients, and oftentimes they hit a roadblock, right? Because your traditional retirement savings plans, your IRAs, your SEPs, your 401ks, they have a lot of compliance behind them. They have a lot of contribution limits that will still allow businesses to be highly exposed. And, when it comes time to it, most people don't have enough saved for retirement. So, a strategy that we recommend to implement into the portfolio of a business is the executive bonus plan. And how it works is the company or the employer takes out a life insurance policy on the key executive in the form of a bonus. Now, these funds pay for the life insurance premium. Upon approval, the executive's family is protected financially due to premature death, right? So, because it's a bonus, this has to be reported to the IRS. But what we usually recommend is that the employer or the company pay what's called a double bonus to alleviate the personal tax exposure of the employee or the key executive. So, if structured properly, the savings within this program can be used as a tax-free supplement for retirement income. And upon passing, the executive's family receives a tax-free death benefit. Here you see some of the additional values of this program. Unlike other retirement saving strategies, if you use the life insurance program known as Index Universal Life, it is a permanent life insurance policy. It comes with two parts. The first one is the insurance, but the second one is a savings, where the savings actually captures the gains of the stock market without any exposure to the losses in the stock market. So this alleviates risks at a high level. It brings a lot of peace of mind, knowing that all of your money is not exposed to the stock market, especially as you get more senior and you're looking to use these funds to live the rest of your life, knowing that most other programs, 401ks and IRAs, are stock market based, knowing that some of your funds are not in the market but still growing strategically is a powerful and relaxing tool, right? Bringing a lot of peace to people. When you talk about the liquidity in the program, the cash value is accessible to the employee. These funds can be used for whatever reason, be it retirement, it could be used for personal reasons, such as emergencies, savings for kids, whatever. There's no prerequisites, unlike 401ks and IRAs. The cash value inside of the strategy is completely controlled by the employee. In terms of gains and growth, this is a good supplement because, like I said earlier, your money gets to get the exposure of growing when the stock market is doing well, and it gets protected when the stock market is not doing well. The funds inside of the cash value are grown tax deferred, so that allows your money to compound a lot stronger over time. And that also helps when it comes to how much money you have access in retirement. When it comes to longevity, the life insurance piece can be designated to a family trust, which I strongly recommend setting up. This allows generational wealth to be structured for your loved ones, making sure that these funds never run out and everybody knows what to do with the funds. They can use it to set up businesses, they can use it for charitable contributions, but it allows the family's dynasty and the family's legacy to grow generation after generation. Some of the newer forms of life insurance allow what they call living benefits. These benefits include chronic, critical, and terminal coverage, meaning that if, God forbid, the employee was diagnosed with any one of these illnesses, be it heart attack, stroke, and others, the death benefit in the life insurance policy can be accelerated to cover any costs, right? So as we all know, illness costs money. Healthcare costs continue to increase in this country. Knowing that you have another bucket, so to speak, financially, God forbid your health decline, is also a powerful strategic resource. And then in terms of like strategically using this program, you can set it up in the form of a pension. You can use it for succession planning, like I mentioned earlier, and additional income in retirement. The reason why companies like using this program is because of the tax benefits, not only for the employer, but the employee. If you use the double bonus, there's no Department of Labor approval needed, so no ERISA, no IRS guidelines like the other retirement strategies. You can use select participation, which is another added value, whereas in typical retirement plan setup, if you set it up for one employee, you have to offer it to all. This program, you can be selective, identifying key people that you want to bonus or incentivize, including yourself, as I mentioned earlier. You can use the funds inside of the cash value of the life insurance policy for whatever needs, be it capital funding for the company, be a line of credit or an emergency fund. These funds are accessible to you. Typically, companies pay out as fast as a week or a few days without any big explanation or credit checks, as if you were to deal with the banks. This strategy, like I mentioned before, is located in Section 162 of the IRS, but here are other tax codes explaining the inner workings of it. You have tax codes related to the plan itself, how long-term care, which is another benefit that could be added to the life insurance policy. As we all know, aging also costs money in this country, as most people are going to need someone to care for them, and that could be a financial detriment if you're not positioned financially in the right way to have some type of support. You also have tax codes around how the money grows inside the policy. It also have tax codes related to how you can access the funds inside the policy, and also how the beneficiaries receive the policy once the executive passes away. So a tremendous amount of value with a strategic tool that many business owners are overlooking. I'm also going to include this document here, actually this spreadsheet, to help you with calculating how much you want to go into the bonus and how much you're going to need to double bonus to alleviate the personal taxation. So on the top line, you're going to enter the amount of premium that you want to put into the life insurance policy or the bonus, right? In this case, you have $10,000. And if a person has a 40% effective tax rate, you're going to put it in a decimal form here. And then on the second tab, it's going to tell you exactly how much you're going to need to bonus the employee to make sure that the taxes are compensated for and the net bonus is going into the policy. So I hope this has been useful for you. This is a supplement or an addition to what you're already doing, but there's a lot of creativity that can be leveraged with a strategy like this. Please let me know of any ways we can collaborate or support you in your needs. This is something that I believe many business owners should capitalize on, as the traditional methods all come with limitations and a tremendous amount of regulation. So I hope to talk to you soon. Take care.